Back in 2021, maybe 2022, there was a business that was doing incredibly well. And this business specifically attracted the attention of a lot of smaller time startups. And these smaller time startups went to this bank, which was the business, and they put a lot of money into this bank because this bank was doing so well. And they were able to give these people a return. And in return, the bank did what every other bank does, but did it in a little bit of an unconventional method. See, this bank, they went and they deposited these different startup founders' money into different things like loans, long term bonds, and things of that nature. And the only thing that this bank needed to make sure of was essentially one thing. And that one thing was basically that the rates in the US economy, that it stayed at a constant level, because if it stayed at a constant level, then they knew that their investments that they placed on a long-term basis, that it would be incredibly profitable, not just for the bank, but they will also be able to ensure the people's deposits that lent their money to them. However, what actually happened was rates in the United States did not stay the same. But in fact, Jerome Powell, who was the Fed Reserve Chair, he actually started changing these rates. And when he started changing these rates, the actual value of their investments plummeted down. So now this bank had an issue. It was not able to pay these people back because they took a loss on their investments. And essentially, a bank run happened. And that bank is known as SVB. And if you're an economist or you know anything about finance, you know this is Silicon Valley Bank. They went bankrupt, they're out of business. But why did that happen? It happened because Silicon Valley Bank wasn't smart enough to understand exactly what their X factor was in the market. And that's exactly what I want to analyze for you. Not everybody has the same X factor. And the moment you realize your X factor, you can prevent, or at least try to mitigate, in a sense, what happened to SVB and prevent you as a trader and your bank account balance and your trading balance going all the way down to zero. So let's get into it. So first and foremost, let's understand and identify what the heck an X factor is. And no, it's not the TV show. But in trading, it's important to understand your X factor. And that X factor is, if I could right here, is basically that thing that everything else depends on. So if I could make an example, it would be for Silicon Valley Bank. It's the interest rates remaining steady. That's their X factor. And as long as those rates remain constant, as long as they remain steady, that bank was going to be incredibly profitable and everybody that invested their money in them was going to be happy. Now, when it comes to the trader, the X factor, it's typically not going to be interest rates or anything like that because you're not holding people's money. But for the trader itself, the typical X factors I see, that thing that profitability depends on. If we could just pick one thing, not two, three, four things, but just pick one thing. By far, the thing that I see most with traders is absolutely going to dial down to emotions. That's always, just about always, the number one X factor when it comes to traders, when it comes to long-term traders, traders, that's a tongue tire. Traders, swing traders, day traders, scalpers, whatever you are, is almost always going to come down to emotions as your X factor. Another one that you can see often is going to be, can you still see this? You can. It's strategy alignment. Right? And when I say strategy alignment, essentially what I'm saying here is that you have a strategy, but are you trading your strategy in alignment with A, your current goals, but B, in its most optimal setting? For instance, if your strategy is you need to trade this at New York session open and you know you're trading for retirement, whatever it may be, okay, well, if you're trading your strategy with proper alignment, you're only trading during that session time, you're doing low risk, because you understand what your goals are. So your trading is in line with your goals. And that's your X factor. So as long as you stay in a strategy alignment, you'll see success. And there are many other ones. But if we were to just go with the top ones, the biggest ones, it would be these two and one more, which is huge. It is going to be simply time. So a lot of people think they don't have time. So let's run through this list really quickly. So you as a trader, you could be saying to yourself, man, if I could just master my emotions, trade with zero emotions in the market, just execute my strategy exactly how it's supposed to be traded, I would be making so much more money. I would be making so much more profit in the market. You couldn't stop me, right? I would quit my job, do whatever I want to do But every time I have a winning trade, I cut it short. Every time I have a losing trade, I hold it. I hesitate way too much. I only see trade setups after they've happened. Emotions. That's your X factor to profitability. As long as your emotions stay good, they stay in check, they stay down, you make money in the market. But right when this starts to rise, just like Silicon Valley Bank, you start to get bankrupt. Your account starts to dwindle down. That's your X factor. It could be strategy alignment for you. It could be this simple thing. You don't think you have enough time. So a lot of traders think, man, if I just had enough time, if I just had more time to trade, I will be making so much more money because I know that when I'm trading, I'm more profitable. When I'm not trading, I'm not profitable. I just need more time. Time is my X factor. When I have more of it to trade, I make more. When I have less of it to trade, I make less. It doesn't matter what your X factor is. These are typically the main ones. Emotions almost always taking the cake at first place. But the important part is for you as a trader, let's draw another arrow, it's for you to, as a trader, to understand and evaluate what your X factor is. Because your X factor is going to be that number one change you need to fix to bring the highest ROI to your trading. And for a lot of people, it's emotions. Because the moment they fix their emotions or find a way to trade without emotions, their profit will skyrocket more than any other activity they can do. Other people, their emotions may be fine because by nature, they may not be a greedy or impatient person or a person that suffers from FOMO. For them, it may literally be time. So now their X factor is time. They have to figure out, how can I create more time so I can do more of this activity that brings a high ROI to me so I can basically stop doing other things I need to do for money, because I understand the more time I have, the more money I make, because time is my X factor. You as the trader, here's an exercise I love for traders and people to just run through. Identify what your X factor is. What's that one thing keeping you from that profitability that you want to see? What's that one fix that you know that once you fix this, you're skyrocketing to the next level? Now, the thing that I love to do with traders is this: your emotions, strategy, alignment, time, all of these can be not just fixed, but you can keep these in check by doing one simple thing. And that one simple thing is going to be called a system. What's a system? I love to help traders build systems, and systems is a way that you can flawlessly and consistently execute your strategy. There we go. So what does that mean? That means that you're taking emotions out the equation. A lot of the time, it means you're taking the need for time out of the equation, depending on how we set up your system, because every system is unique to the investor. And strategy and alignment is no longer a thing we even consider, because your system is going to be able to execute on a day-to-day basis. Now, when it comes to the X factor, when it comes to becoming as profitable as you can possibly be, creating a system, in my experience, in my opinion, is the best and really the real way to be able to, obviously you need to understand your X factor first, but once you understand it, is the best way to be able to ensure that your X factor is always in agreeable terms with you. So if we go back to the bank example, this system is going to allow those interest rates to stay low for Silicon Valley Bank so they can keep making a lot of money. This system is going to cause emotions to be non-existent so you can keep making as much money as you possibly can in the market, because you know emotions are your X factor. And you know systems cancel emotions out of your trading. You know that system cancels the need for either all your time or a large chunk of your time that you're currently spending in the market. So when traders, first, if they don't know what the X factor is, understand it. Second, find out what your X factor is, because that is so important, because now you can prioritize that one thing that's standing in the way from you making the most money trading. Everybody thinks they need to be a better trader. Everybody thinks they need a better strategy. Everybody thinks they need to spend more time with their strategy and get better at it. And I find that's very rarely the case. I find that they just haven't properly identified their X factor. And as a result, they're chasing and trying to do all of these other things that's going to bring marginal improvements to their ROI, when the glaring underlying problem that they have, they're not addressing it because they don't identify that as their X factor. So identify your X factor. Once you do that, build a system around your strategy so that systematically you're ensuring that this X factor is always in your favor, is not being left up to chance. And this is exactly what I love to help traders do, and see those aha moments and light bulbs go off. But find your X factor, build a system around it, stay profitable. This is RD Trades, and I'm out.